Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Checking in on the dollar and gold. Pretty good day for the gold bulls and the gold miner bulls. As we can see, the dollar set a lower high and then a lower low. So we're looking down at support on the dollar now of 170, then down to 151. And then on down to 126, our recent low. With resistance, our lower high just set at 100, or make that 101.50. So a clear little lower high and lower low over the past 2 days, and what that leaves us on the daily time frame is weakness, rejecting from the 10-day moving average resistance. And we've rejected from this level now 1, 2, 3, 4, 5 times since we hit that high. So need to keep an eye on this resistance as it keeps knocking the price down. We have not seen 2 green days in a row since we hit that high, and the bears remain in control as we head down to our recent low. So that's a great sign for the gold bulls as they saw some nice recovery where we had a higher low and then a higher high with a nice strong big breakout candlestick. Gave back a lot of those gains on the next hourly candlestick before the close of the day. There was definitely profit taking going on in those miners into the weekend, but the opportunity was there to lock in some profit as well for the bulls. So what we're seeing on the daily time frame is the back test and the hold of the 10-day moving average support. So again, we went bullish when it became support, closing over that level, and now we're back testing and holding it, the low of the day, 2 days in a row, bouncing off that level, and that level is currently at 1198.69. So the bulls still maintaining strong, but you can see the upper wick showing that profit taking by the end of the day. So what we have here, and what looks to be forming to me, is a pattern that you'll see on every time frame very often, and it's what I call reaching an equilibrium, and it comes after a breakout or a breakdown, and you have your initial consolidation low, another attempt to continue, and you form a lower high, a pullback, a higher low, lower high, and you continue to see that range tightening, usually on decreasing volume, and you can zoom in and see it more clearly on other time frames. Let's see what the 4-hour chart looks like. So this would be our low of 1195.75, and then our higher low and our clear little lower high. Let's look at it on the hourly time frame again. A little bit of different picture. So watching very close, and we can draw some trend lines to help us visually to watch for when this break is going to occur. So that would be an uptrend line I'd be keeping an eye on. And in terms of a downtrend resistance, perfect rejection on that attempted breakout. And when I draw these lines again, and this isn't a good line, I want to make sure no candlesticks, no real bodies of the candlesticks are closing above my downtrend resistance line. So I'd put that level right there, hitting this little bounce attempt, hitting this bounce attempt, and I'm going to get rid of this horizontal 1206 level. So that's what I would be watching right here, and that's the equilibrium that's being reached on the daily time frame. And obviously a bull break will be bullish and a bear break will be bearish, but I'm going to keep an eye on these levels as they continue to tighten. So bulls are in control, no doubt about that, as we are back testing and holding those levels, and we're going to keep an eye on this higher low, lower high equilibrium. And pretty much what it boils down to, in my opinion, is you can see the correlation between the S&P 500, where the weakness in the S&P 500 today is when the bulls really took off, and that was these big candlesticks here on this breakout for 3 hours. So check out my SPY videos. If you are watching gold and trading the miners, in my opinion, you want to be watching the dollar, the overall market in the form of SPX or SPY, the S&P 500. You want to be watching gold, and then your individual miner that you're playing. So those are the four main components that I would be watching if I were playing an individual miner. And we are in a position now, if you watch the SPY videos that I put out every day, where we're just trading sideways for 3 weeks and we have no conviction in one direction or the other. Might as well pull it up right now. But we're seeing red, green, red, green, red, green, just back and forth. This middle Bollinger Band support has held 6 of the last 7 days. And we're watching for a clear break. We're going to either get a new all-time high, in which case I would expect gold to consolidate further, or we're going to break down and lose this middle Bollinger Band support and be headed down to 222.73, which in my opinion would be the fuel for the gold bulls to head to higher highs and make their move up. And let's see, the highest price we've seen now is 1218.75. And let's say if we did, again, hypothetical situations, but if we did get a bearish break on SPY and a loss of that middle Bollinger Band, I'd be looking up at 1220.90 and then up to 1232.92. So those are the two little bounce attempt resistances that we rejected from that ended up being bear flags. But it's what the S&P 500 does is going to be very important in the short term for gold here, in my opinion. So I'm going to be keeping a close eye on that. And again, a bear break, we're looking for continuation to the upside. Looking at the miners, so you can see that upper wick. We had that 100-day moving average resistance on GDX, and we've now rejected 3 out of the last 4 days from that level. It's at 23.31, but in the same time, we're bouncing off this 8-period exponential moving average support 4 times on the way up. So you can see those levels are getting tighter and tighter every day that goes by, and they're going to be so tight on Monday that we're either going to see a close above the 100-day or a close below the 8-period exponential, in my opinion. Still possible we could close between it on Monday, not very likely, but if we did, then we know Tuesday we're certainly going to see a break in one direction or the other. The weekly time frame did hold that middle Bollinger Band, turning that into support now. That's at 22.83. We're on the verge of a bullish MACD cross. Higher low pattern being maintained ever since this bounce started, and that's a good sign for the bulls on the weekly time frame. Pretty similar for GDXJ. It has a different resistance. It's 200-day moving average, and yet another inability to get over that level. So we now have about 4 or 5 rejections. That level's 38.12. Same thing with the exponential support. We almost broke it yesterday, but still closed above it to maintain that support. So those levels are converging as well. And the weekly time frame gained that middle Bollinger Band last week and now back tested it and held it this week. So bulls certainly still holding on and looking good, and watching the tightening range on the daily time frame and those key moving average resistances on the daily chart for those individual miner names. And again, for gold, we have not seen a bearish reversal candlestick confirmed since this bounce started. We have not seen 2 red days in a row since this bounce started. And I believe we're going to see some tight sideways trading until we get clear direction in the S&P 500. So we'll check back in over the next week. I appreciate you watching, and I hope you have a great weekend.